So welcome to this week's video, and this week I want to take on a topic that the New York Times editorial picked up recently, and so have a few other newspapers, and that is dark pools of liquidity. That sounds a little ominous, so let's take a look at what they are and whether they matter. And I'll be arguing that what they are sort of makes sense, particularly if you work inside the city, but as to whether they matter and whether something should be done about them, the answer's got to be yes. All right, because there are a couple of problems if you work outside the city with the whole concept of a dark pool. Or even the name suggests something shadowy and something that should probably be reduced in practice. So, what are dark pools and what kind of person uses them? Well, the background to this video is a video called What is a Stock Exchange? Have a look at that one if you're not sure. Let's get straight in. What are dark pools? Well, essentially, if you buy shares, there are basically, broadly speaking, two ways to do it. In fact, there are two ways to buy anything in the markets. You can either do it on exchange, as it's called, or there's a market for deals done off exchanges. Now, this video, I'm not proposing to go all the way through the dynamics of both markets, but let's say you were to try and buy some shares through a broker. All right, in theory, they have a choice about how a deal is done. They can either approach one of the big exchanges, New York, London, and so on, where lots of shares are listed and are available for trading, both for big and small clients, okay? Or in some markets, like the bonds market, the foreign exchange market, there aren't big central exchanges, and most of the deals are done over the counter or off exchange, okay? Now, here's the problem. A dark pool is connected with exchange-based deals. All right, and as the name suggests, things that happen in dark pools are not quite as obvious. All right, they're not quite as clear as things happening on exchange. All right, so what are these dark pools? How did they come into existence? Well, they're an example of a little idea that was designed to solve a specific problem that's kind of blown a little bit out of control recently. Okay, they've kind of gone beyond their remit. Because dark pools were originally, if you like, and you could see as the origin of a dark pool was originally the idea that a big participant, imagine a pension fund, for example, big market participant, they've got a lot of shares they want to sell, okay? And what they don't want to do is let the rest of the market know they've got all these shares to sell. Because in a market, if somebody declares they've got a huge number of something to sell, other people move the price against them, i.e. drop it, and they end up selling for a lot less than they hoped. So in a market, in a big market, you don't want your competitors to get wind of the fact you've got a lot of shares to either buy or sell. Okay? So a pension fund might talk to a bank, Barclays, Goldman Sachs for argument's sake, and say, can you work this order in a share that's listed on an exchange over a number of days for us? In other words, to break down the jargon there, can you get rid of this big block of shares at a really good price for us? And Goldman's would say, yeah, I reckon we can do that. Okay? And they have a chat with the exchange and say, look, my client doesn't really want to just dump all these shares in one go through the exchange. They're never going to get the best price. So can you give us a bit of time to work the order, phone people, okay, get buying commitments for this big sell order? All right? And all that would happen sort of away from the main exchange. It's called a block trade in the UK and sometimes in the US, and it'd be basically a client wanting to either get rid of a lot of shares or buy a lot of shares without alerting other exchange participants to the fact they were doing it. Okay? Now, they can't do it purely off exchange because they are trading something which is listed and regulated on a recognised exchange. That's the point. So it's not technically a completely over-the-counter off exchange deal, but it's got the sort of hallmarks of one. And unlike an off-exchange deal, once that big sell order is completed for the pension fund by the Goldman Sachs, for argument's sake, the exchange has to know about it. Okay, you can't just let it go. So eventually, everybody who trades through an exchange, like the London Stock Exchange or the New York Stock Exchange, will know about these big orders, but there's a time delay. Now, those types of order and those time delays, publication delays as they're called, allowing participants of an exchange to work a particularly large or unusual order, they used to be confined to a fairly limited number of trades. But dark pools are really the whole thing exploding a little bit out of proportion, all right? Because now in the US, you've got something like 50 dark pools attracting this kind of exchange or away from exchange trade, okay, something being done almost in the shadows, away from the main exchange, something that normal regular members can't necessarily see happening as easily as non-exchange pure transaction. You've got 50 of these things, whereas you've only got something like 13 recognised exchanges. So suddenly they've exploded. What used to be a sort of little concession from exchanges, a way of getting a difficult deal done, has become this kind of massive market. Okay, and it's estimated that something like 38 to 40% of all US liquidity in listed stocks is heading into these dark pools. To translate that into English, around 40% of deals that are done in any US listed stocks are happening out here on the fringes. Okay, now why does that matter? People in the market will say it's brilliant. You want dark pools. They say, as a result of people being able to do these kind of slightly secretive trades, if you're a normal regular investor, you get better prices, more competition, people feeling more confident about trading, not having to show their hands. Fine. But here comes the criticism. I do have some sympathy here with the New York Times editorial view on this. The problem is the name gives it away. As soon as you have transactions being completed away from an exchange that would normally be part of the exchange's normal activities, that will tend to move liquidity. That's volumes of trades away from the exchange. That can start to affect prices, the volume of trade going through the exchange. It can make it harder to get reliable prices on exchange, and it breaks down trust. The very fact there's an expression called dark pools doesn't fill you with confidence. Even if they serve a legitimate purpose, people are going to be going, hang on a minute, do I trust the exchange? What's going on? There are these deals going on around the side, and they might be all legitimate and agreed back in time, but crikey, can I really trust the price on the exchange? So really, the reason something needs to be done about dark pools is they do, if nothing else, start to break down trust amongst investors who think, well, wait a minute, are you telling me there's a whole load of deals being done where I'm not getting to participate, or I couldn't possibly participate? Okay, so what needs to happen? Well, I've got to be honest, the US hasn't got there yet, but some sort of control, I think, over these rapidly expanding dark pool trades need to be exerted. So the Canadian, Australian model might be the one to go for. They've said a couple of things about dark pool trades. Number one, no trade can be done through a dark pool unless the price being achieved on behalf of either a seller or a buyer is better than the one you could get by just dealing in the normal way through the exchange's mechanisms for dealing shares. Okay. And secondly, they've imposed minimum trade sizes. We actually have those in the UK on block trades anyway, all right, but they've imposed minimum trade sizes on dark pool transactions. They said if you want to do it this way, it's got to be, almost going back in history, it's got to be for those awkward, sizable transactions that can't easily be worked through the exchange. Okay, so there it is. They have it. A very brief guide to dark pools. They sound a bit mysterious. Their origin, okay, was in many ways legitimate. There's still a place for the sort of thing that goes on in a dark pool, but I'd argue that things have got a little bit out of control, and if the authorities are not very careful, people will quite rightly start to get suspicious of dark pools, wonder how many deals are being done through dark pools, and ultimately wonder whether they can really trust the prices they're seeing on a daily basis running through stock exchanges. I look forward to seeing you next week.